Mark, help us focus back on the macro themes. US futures look pretty flat after a day yesterday where we saw investors trying to draw a line in the sand, Anthropic being cast as a collaborative tool rather than something that's going to destroy software everywhere. What do you make of the latest price action around equity markets?
I think that what we're seeing in markets so far this year, and really the last few months, is going to be the backdrop for the next long term, for the next maybe year, maybe longer. And what I mean by that is that the underlying story is incredibly bullish still. We have just fiscal stimulus happening around the world. We have easy monetary policy. We have an incredible capex bubble, but we're in the inflation stage of that bubble. Everything out there is super positive from a macro point of view. And the disruption we're seeing, that the supposed big negative, the bogeyman, is a risk of excess productivity, is a risk that things get produced too quickly, that there'll be too much wealth predicted. So therefore, there's going to be individual big losers. The volatility is going to get worse. The sector dispersion is going to increase. And I think that sometimes some of those volatility scares will have knock-on contagion effects they've not really seen now, that see a broader market big correction. But those corrections, even the bigger ones, will ultimately be bought quite quickly. I think the underlying market is going to get increasingly more volatile over the next year, while ultimately probably going a lot higher. But I'll also say that the theme of the rest of the world outperforming the US is the one that's really entrenched. I've been in that camp for more than a year, as you know, and I think it continues. I think it's a multi-year trend. We've talked about this since end of January last year, that we're in a multi-year trend of US underperformance after a 14-year trend of US outperformance. And so it's 14 years of outperforming. It can do many years of underperforming before we need to worry about it being an overshot trend.
Well, Mark, this is my first week on the opening trade of 2026, so tell me, where are you looking outside the US for opportunities?
Yeah, look, I continue to think the Asia story is excellent. I think that, one of the biggest impacts of the Trump administration is to really, restore China's place in the world and kind of help it boost its trade in Asia, help it boost its kind of its importance, help return its markets to investor focus. So I think, I'm not saying China itself, but because of China, it's all the derivatives in Asia that do really well. China stocks themselves, you need to be much more of a stock picker, and they're not actually cheap. I think Hong Kong's always the better way to play the China trade. I think Korea, it's really a two-stock story, but there are stocks that are going to continue to do well. So I think Korea will continue to do well despite over 100% over the past year return. I think Latin America is still really interesting. I think, things like Brazil still has the commodities that the world needs. So Brazil, Korea, Hong Kong, these are some of the really, really interesting stories. But I think there are many interesting opportunities. Many stocks in the world are not particularly expensive. US stocks are still expensive, and there are other expensive stock markets, but many stock markets aren't expensive, given that we've got a pretty good global macro backdrop. So it's that tailwind of spending from governments and AI companies and easy monetary policy is a very, very strong tailwind.